Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, September 17th, 2019. Again, we find ourselves in the last hour of the trading day. As I mentioned each day, I believe that the prices as close as you can get them to the close of the market are the most valid prices of the day. In my opinion, the prices during the day are controlled by algorithm, controlled by day traders. And then in the final hour, the market makers, large financial institutions start taking over the prices and moving them where they believe are the most valid prices. And that is where I want to hitch my wagon. I want to hitch my wagon to them. They're the smartest, they have the best information, they're the most well equipped. And so that is why I make the majority of my buying and selling decisions right near the very, very close of the market. So we are having a bit of a dull day today. The Dow is down 23 points, the Nasdaq is up 10, and the S&P is up zero point 0.8. So pretty dull day, pretty flat. We have the FMOC meeting today and tomorrow. I believe tomorrow they're going to release information on whether or not they're going to cut rates, and if they do cut rates, how much they're going to cut rates. I believe this will definitely have an impact on the market. I think the market's pricing in a 0.25% rate cut, but as is with a lot of news, sometimes that is already baked in. So even if they cut by a quarter point tomorrow, who knows? Is the market expecting more? It could be. It might sell off on there. We may have a 50 rate basis point. Who knows? You never know. If we do, the market might like that, or the market might view that as negative, as the economy is worse than expected if we have to cut that much. So it's very hard to figure this stuff out. I don't try to do it. I just go ahead and trade based upon what the price action, what the market's telling me. So, all right, let me just make sure that everybody can hear me. If you can hear me okay, please do me a favor, just say hi in the chat, or you can hear me. Just want to make sure everybody can hear me before we get started. So listen, I appreciate you coming today. I appreciate your spending your time with me and investing your time with me. I hope it's helping you. I hope it's giving you maybe possibly a different way to look at trading these markets. The main principles are always be patient, position size correctly. When you're wrong, get out quickly for a small loss. When you're right, have the courage and the patience to stay in until the market tells you that something is changing. So those are the principles of good trading. You need to have large wins, small wins, scratch trade, and small losses. That is the formula to success. So some people have a hard time getting out when they're wrong. They have a hard time getting out of their stocks. Some people are like that. I'm not like that at all. But on the other hand, you also have to have the ability to stay in a position as it's moving your way. And some people have absolutely no issue with this. Some people have, it's more of a challenge. For me, I get out of things quickly when I'm wrong. So that's good. I'm glad I'm blessed with that. But we can always do better in our trading. And for me, going up and holding on to things day after day after day is a little tough for me, but I do my best. But you kind of have to decide, or have to not decide, but you have to understand yourself and know which ones you have challenges with and work on those. So let's take a look here. Hey, I guess I am coming through. Hey, GT. Good to see you, my friend. Thank you for coming as always. Hi, John. How are you? Glad to see you. Marco is here. Nice to see you, Marco. As always, Anthony, buddy, what's going on? What? He's coming through perfectly. Hello. Good to see you, Anthony. I think we had a good lesson last night. Hey, Steve Burns. How you doing, Steve? Steve says you're doing a great job here, Greg. It's a great place to spend the last hour trading. Thank you. I appreciate that. It means a lot, Steve. Especially coming from you. I really look up to Steve. Steve's a famous author, trader, mentor, teacher. It's made a huge difference in my trading career with what I've learned studying with Steve. So it's always an honor to have you here, Steve. Really is. I'm always excited to have you here, and I'm sure everyone else is as well. What about that Etsy, huh? Boy, did we miss out on that. That'll be one we're talking about for a while. Oh well, it happens. It happens. So, all right. Well, listen. The format for today. First of all, we're going to run the U.S. legal disclaimer. Going to come back. We're going to take a look at all my current positions. We're going to take a look at when I bought them, why I bought them, and more importantly, how I'm going to manage them, whether they go up or they go down. Then we are going to spend a few minutes on trader psychology. I try to mention this every day. I believe it's the most important skill that you can learn, and I phrase that very carefully because, I want you to understand what I'm saying. The skill, the psychology of your trading is a skill, and so you need to work on that skill. The skill is just not where to buy and where to sell, right? You do have to do that. You have to understand the technicals for sure, but your biggest challenge moving forward in your trading career is, do you have the skill to get out? Do you have the skill to stay in? And so, if you're ever challenged by that, don't think of it as, oh, I wish I was stronger, or I wish I could do this, and why isn't something inside me not wanting me to let me get out or get in? Don't think about it as your personality. Just think about it as a skill. And every time you do something right, when you get out, go, okay, I'm developing my skill in getting out. But really, the psychology portion is going to make the difference whether you're a long-term profitable trader or you're not. You might trade for a month, 2 weeks, 6 months, do really well, but then the market changes, has some kind of volatility coming in, and that's when you really need to sharpen up on your skills and fight everything that you don't want to do and things that you do want to do and don't do them. And so anyway, I hope this is coming through, but it's a skill. Your psychology is a skill. So please work on that every day. So that's why I will do a little bit on trader psychology later. Then we're going to go through my watch list. We're going to take a look at each stock. We're going to take a look at all the technicals. We're going to look at support and resistance. We're going to look at indicators such as RSI, MACD, moving averages, ATR channels, different patterns. And if we can find something at the end of the day, we'll go ahead and place that trade if it's a valid trade. Ideally, if we have a confluence or combination of indicators lining up. I mentioned this also each day, but I look at different technical indicators as different groups of buyers. And if you want something to go up, you need other buyers in your camp, right? That's what's going to make it go up. So if you can get a confluence of signals, a confluence of indicators lining up, I look at that as several different groups of buyers or multiple groups of buyers coming in, and the more buyers, the better. And if the price action is such that it's at resistance, it has resistance from a moving average, it has resistance from an RSI, it has resistance from an ATR channel, most likely you're going to get a group of sellers. You don't want to be buying when there's multiple groups of sellers coming in. So that's how I view the market. I hope that helps. But yeah, we're going to go through each one. We're going to see if we can find some kind of signals, ideally a combination of signals. And if we do, I'll go ahead and place that trade at the end of the day. And then after the market closes, if anybody has any questions about what I discussed today, if you're not clear, you're just not sure, you have a question, don't be shy. There's no stupid questions. Please just type them in the chat and I am happy to address them and hopefully clarify. And then also if you have some stock symbols that you would like me to look at, I'm very happy to give you my humble opinion on your stock symbol. So that is the plan for today. And if you don't mind, hold tight. I'm going to run the U.S. legal disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, all right. So let's go through my current positions. As you guys know, I've had some issues with Trade Navigator over the last 3 or 4 days. It's been a big inconvenience, and boy, I'll tell you what, when your charts are not working, you just feel like you don't know what's going on. But luckily, I have a second set of charts that I can rely on that I'll be showing today. But for some reason, Trade Navigator is having an issue with its feed. For any stocks that are on the New York Stock Exchange, I can get them in today. I just can't get them intraday. I spoke with them again today, and they say they're working on it, making progress. So I sure hope so, because I would hate to change charting platforms, but who knows? I may have to if they can't get this together. I'm actually just kind of grateful that this happened during a period with the type of positions that I have, and there hasn't been a lot going on in the market. So first off, let's talk about the DDM. So this has been a great trade. I bought this back here on the 26th of August. This is a mechanical trade because it is an ETF and not a stock. I bought it on the 26th here at 45.75. I bought it because the previous day had closed under the 200-day. The day that I bought it, it closed over the 200-day. And this is a good back-tested, proven, profitable long-term approach of staying in the DDM, which is the double leveraged Dow, when it is above the 200-day, and staying out when it is under. I do phase out each day when the market gives me a certain amount of movement to the upside. And as you can see, I have scaled out. This has been a wonderful trade. Scaled out, scaled out, scaled out, scaled out, scaled out, all the way up to here. I have about 30% of my position left, so I don't have a lot of this position left. Have not hit any profit targets for the last few days. This is, well, let's just take a look. Because that chart is not up to date. All right, so DDM is very close to being even here today, but it's a very, very clear-cut trade for me. As long as we stay over the 200, I will keep the remaining 30 shares, even if I have to write it all the way back down, because that is the approach. But hopefully that won't happen. Hopefully I'll get a few more profit targets and I'll be able to get out of this position. But this has been a great trade, phased out. And the phasing, the phasing out helps me hold this trade for a long time. If I was just one entry, one exit, it would have been honestly a little bit more difficult for me to do that. But that's just me, and that is one of the reasons I phase out. So it's been a great trade. Again, to the upside, I will phase out if it keeps moving up until I'm out of the position, or I will get out under the 200-day with a loss. And normally, with the discretionary trade, I would not do that. If this was a discretionary trade, I actually would have gotten out yesterday. Or I may have gotten out down here. You never know, right? But this is a mechanical trade. I've stayed in it. I'll phase out to the upside till I'm out of shares, or I will get out under the 200-day. So that's the plan. Google. So this chart is working. I did take Google back on the 10th of September. I bought this because we had a valid crossover. We had a 10/30 SMA crossover. This is a good back-tested approach, crossover approach to trading Google. It is profitable in the long run, offers you large possible rewards, small losses. That's why moving average crossovers work. But I did buy it here at 1202.70. This is a stock. I don't want to hold it through earnings. So it is not a mechanical trade, not a mechanical crossover trade, but I did take the entry based upon the crossover here. It has worked out nicely for us so far. Have scaled out, has moved sidewards. Today, I am going to get out of Google if we close below yesterday's low. That will be my signal to get me out. So yesterday's low was 1225.19. Right now it's at 1225.39. So this will probably be a photo finish, not sure. But if it does close under there, I will go ahead and get out of Google and lock in that profit. It's been a nice little profit. Q's is another moving average cross mechanical. This is mechanical approach to trading the Qs. I did buy the Qs here when the 5 EMA crossed over the 20 EMA. This is a valid back tested approach. You can see it's moved up nicely. On the moves up, I've scaled out. No scales here, another scale here, another scale here. No scales today. I'm probably out of about 30% of this position. This is a mechanical approach, so as long as it continues to move up, I will continue to phase until I'm out of shares, or conversely, if the 5 EMA crosses back below the 20, that will be my exit signal. But because, even if it does go down here, you know, the thing I like about phasing out is I have locked profits up here at these higher levels. The market cannot take this away from me. So if it does end up moving down, you know, that's unfortunate, but I've locked in 30% of the positions at profitable levels. And if it does go down, locking those shares in up here will mitigate the loss if we go back down. So I'm going to phase out until I'm out of shares. If it keeps moving up, if the 5 EMA crosses back below the 20 EMA, I will go ahead and get out. But so far, really nice trade. Okay, IBB. So I did buy IBB yesterday when we had the 5 EMA cross over the 30 EMA. This is another profitable long-term back moving average crossover approach to trading the IBB. I bought it here yesterday at 105.18. We're today at 105.21, so I'm up 3 cents. So I am grateful for that. I will stay in this is a mechanical trade as well. I will stay in this as long as the 5 EMA stays above the 20 EMA. And if it continues, if it moves up, I will phase out until I'm out of shares. Or again, conversely, if the 5 crosses back below the 30, that will be my exit. My exit signal was up higher today. You can see I have my 3 profit targets up here today. Have not hit any, but glad to be basically, you know, well, now I'm down 2 cents on the trade. So that's how it goes. But these mechanical trades are easy. They're black and white. Phase to the upside till you're out, or if the crossover that you entered the approach on, like here, the 530 crosses under, get out, and hopefully for a small loss. All right, so the world famous SPY trade. We talk about this each day. This is something that I buy each day, regardless of the technicals. You might ask yourself, Greg, why would you do that? You're not even looking at the technicals, and that is true. But this is based upon data from a long-term back-tested approach from Lizanne Saunders at Bespoke Invest. This is from 1993. You have 2 choices. The first choice is that you would buy the SPY, the SPY, the S&P 500 tracking ETF, buy the SPY each day at the open, and then sell it at the close. Buy at the open, sell it at the close. This is one approach. But if you would have used this approach from 1993, you'd have actually lost 13.9%. If you use the second approach, which is what I use, I would buy the SPY at the close. You'd buy the SPY at the close each day, sell it the next morning at the open. Every day, buy at the close, sell the next open. Buy at the close, sell the next open. If you would have used this approach, you'd have actually returned 634.2% compared to a negative 13.9% doing it the other way around. And, you know, this obviously has shown an edge over time since 1993. You know, the thing I find fascinating about this is when you look at these numbers, what this is telling you is that all the gains in the S&P 500 since 1993, all of them have come in the after hours market. They've come from people bidding up the price in the after hours market, bidding up the price in the pre-market, and selling it into the open. So this chart, the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see over time, you have a clear edge using the buy in the afternoon, sell in the morning. You know, it's not all rainbows and butterflies. There are drawdowns. These are normal movements in any kind of edge trading situation where there are drawdowns, but these are normal. They happen, right? But the takeaway here is, because in the long run it works, you need to use a position size that's going to keep you in for the long run. It's as simple as that, because you may have started using this approach right here and it went down for 2 years and you said, this is the worst approach ever. And if you were to use too large position sizes, you may not have had the staying power to stay in when that edge plays out. So the reason I like this chart, it shows what an edge in a trading approach looks like over the long term. You really can make money with it, but you have to stay in the game long enough for it to play out. So position size, very important, everybody. I use a 10% position size. So if I had $100,000 in the account, I would buy $10,000 of the SPY each day at the close, sell it first thing in the morning. All right. So with that said, I did, and we don't have data on this today, but I did buy the SPY yesterday. This bar is yesterday's bar. I did buy the SPY yesterday at 316 cents. Sold it this morning for a small loss at 299.91 cents. So it's a small loss, no biggie, but I will be buying the SPY again today at the end of the market as usual. I've been doing this since February 26th. It's worked out really well. The month of May was horrific. I think I lost about 80% of my trades. But back to what I was just showing you on that chart, it happens, right? You do get drawdowns. And if I would have loaded up and started this in May with huge position size, I don't think I would still be doing it today, right? So that's why it's important to always be conservative with your position size. So you can kind of, roll with the ups and roll with the downs. But I will be buying this again today at the end of the end of the market at the close. All right, so here's SPY. I did buy SPY back here on the 13th of September. I bought it for a variety of reasons. First off, big picture. We have a double bottom. See the bottom here? See we rally. See we come down and make a much lower bottom. You can see the depths of the MACD bars here. This is momentum to the downside. That's what that tracks. Sorry. But here we have, even though we're lower, we have lower MACD momentum, and this is what's called a double bottom with a bullish divergence. I learned this from studying one-on-one with Dr. Alexander Elder. This is one of his favorite setups. So big picture, that's what I liked. My trigger to get into the trade was we had this beautiful V1. Here is day one. Here is day two. Day two washes out day one. Day two closes above day one's close. In addition to that, we also went under the 30 RSI the previous day, closed back over. That's another trigger for me. And we also tagged the third ATR channel. And the majority of prices, 90% of prices, stay above the negative third ATR channel and stay below the positive third ATR channel. So once you get down here to this third ATR channel, doesn't mean for sure it's going back up, but the tendency is that it does tend to bounce here. So when you take it all together in the aggregate, you have a low, a rally, a lower low with the bullish MACD divergence. You have the price closing under 30, then back over 30. You have a nice V1 entry. You tag the third ATR channel, and that is why I bought Square. We had a nice day yesterday. This is only yesterday's bar. We had a nice day yesterday. We hit one profit target. We hit another profit target today, and let me show you. Okay, so this is actual real data on my other charts, but you can see I did hit one profit target up here at about 60.25. This doesn't show me exactly where I put that line, but it did go up higher, and it's reversed quite a bit. It was up much higher earlier on, but again, one of the reasons I like using the profit targets is that I phased out and took some more shares off the table. Going forward, how am I going to manage this trade? Well, I am going to continue in this trade if it moves up, unless if it gets up to the 50 RSI, which is right about here. I don't have it on this particular chart. Let me see. I think I have it over here. Yeah. So in the future, if we get up to the 50 RSI, reject the 50 RSI, that will be my trigger to get out of the trade. If it stays above the 50, great, I'll hold it. If it rejects the negative 50 EMA downward sloping, this is my ultimate profit target on this trade. If I get up to here, I will have scaled out of all of my shares. Now, conversely, if tomorrow we close under today's low, that will also be a signal for me to get out of the trade. So this has been a nice trade so far. It was up yesterday on down market. So again, to the upside, I will continue to phase unless we reject the 50 RSI or I run out of shares. To the downside, going forward, if we close below today's low, that will also be a signal for me to get out. But glad we did hit one profit up target up here today. Market can't take that away from us, right? So that's square. And last but not least is SSO. I did buy SSO here back on the 6th of September. I bought it when the 10 EMA crossed over the 50 EMA. This is another one of those mechanical, profitable, long-term back-tested approaches to trading SSO. SSO is the double leveraged S&P. So I bought it here at 128.66. It has moved up since we've bought it. I have phased out some here on the moves up. I will be staying in this as long as the 10 EMA is above the 50 EMA. If it crosses back below, I will go ahead and get out. If it continues to move up, I will continue to phase to the upside until I am out of shares. One point here I want to make is when this crossover happened, when the 1050 EMA crossover, it closed a little high for me. I prefer to take trades inside the value zone, because once you start moving outside the value zone, you get that rubber band pulled pretty tight. But in case it did move and have a big move, I did want to participate in it. So I took basically a half a position up here because of where the price was when the crossover happened. So this is okay. So it's up 16 cents today. Let's look at the charts that work. Yeah, it's up 16 cents today. So this is where I bought it. So no profit targets here today, but this is an easy trade. This is an easy mechanical trade. Okay, 128. All right, so those are the positions. So, okay. As everybody knows, I do like to talk about trading psychology each day. I hope that you will internalize what I'm saying, and I hope by listening to it each day, it will become more and more of you as a person and as a trader. To hear what I say about trader psychology. Actually, not what I have to say, but what I find on Twitter that I think is helpful. But this is from Rainer Tio. I like this channel at Rainer_Tio on Twitter. I would suggest that you subscribe to his channel. He does have good information. He puts out good trading words of wisdom each day, and so I like to look at his channel each day. But Rainer says, one tip I can give to a fearful trader is to trade smaller. Keep reducing risk to your comfort level and slowly work your way up. Rome, Rome wasn't built in a day, and it's the same for your trading account. But, this is why I always talk about position size, everybody. The only two things you have in your control in trading is one, your position size, and two, when you enter the trade. After that, you have no control over it. You think you might, but you don't. It might gap up against you. It might gap down against you. the larger the position size that you have, the worse you're going to trade, because the larger position size creates more emotion. The more emotion you have, the less likely it is that you're going to follow your plan. So, I spoke with someone the other day that told me every time that they switch from cash trading to demo trading, then they start doing well. Well, geez, why? I wonder why, right? I mean, of course, it's obvious. It's because there's no emotion in the trade because it's a simulated account. It is really that simple. So, what Rayner's saying here is, if you're not comfortable with your trades, if you are not getting in, getting out of the trades when you're supposed to based upon your plan, it's most likely because you're fearful, and you're fearful because you're trading too large. So what you have to do is you have to find a level of your position size where you can hold on to those positions to the upside or the downside, as long as it's part of your plan. If you can find that sweet spot of position size which allows you to follow your plan, do it correctly, then that's probably the right position size. But if you're position sizing too large and you find yourself getting anxious and fearful and not adhering to your rules, it's because the position size is too large. So, try to find that number, try to find that spot, and start acclimating. And if you get used to that level, okay, well, maybe bump it up just a little bit more until you get used to that level. But the main thing here, everyone, is that we have to follow our plans. The only way we can follow our plans is really being comfortable with our positions, and that all stems back to position size. So thank you, Rainer Tino. Real quick, one tip I can give to a fearful trader is to trade smaller. Keep reducing risk to your comfort level and slowly work your way up. Rome was not built in a day, and it is the same for your trading account. Absolutely correct. It takes time to be a good trader. I always talk about each trade being one of the next 1,000 trades. And more importantly, take the long-term view on trading. Everyone takes the short-term view on trading for some reason. Long-term investing, people can wrap their heads around. But long-term trading, people have a hard time with. And, the more you trade, the better you're going to get, the more skills you're going to have. But you can only do that if you stay in the game. And the only way you can stay in the game is by not blowing up your account. The only way you're not going to blow up your account is position sizing correctly. So anyway, thank you, Rainer Tino. Okay. So let us go ahead and go down through my watch list. We're going to have to switch over to... All right. I'm not used to these charts, everybody. It messes me up. Anthony says, you explained the V1s and V2s very clearly. I really didn't grasp the full concept from the daily videos. I have far to go, but I understand more now than I did 24 hours ago. Yeah, that was a pretty intense lesson. You did really good, Anthony. Hi, Murat. How you doing? Good to see you. It's our friend from Norway, Frederick. Hey, buddy. How you doing? That's our friend from France. No car today with my trade. Maybe tomorrow. Just joking. John Cortez. Hi, Greg. With the S&P trade, do you buy and sell with the market order? Yes, I do. Yes, I do. I put a market on close order in at least 15 minutes before the close. That way it just buys at the very end. I don't have to worry about it. But yes, I do. And then I just put a market order in for the next day. All right. All right. I'm running low on time. I will get back to those comments when we are done. So let's get going here. Apple up 28 cents today. It's above the 1 ATR channel. There's really nothing that I can do with Apple here. It's just too high. RSI is 6180. It's just too high for me to get involved with at this point. Adobe did recoup some loss and go positive today. We have earnings. We do have earnings, I believe. after the bell today. So as you know, I do not get involved with earnings. I feel like it's a gamble. So nothing on Adobe today. AGQ, I am definitely looking at AGQ today. We are very close to having a 520 EMA cross. That is a good back-tested approach to trading AGQ. We actually, right back here, we went long with that same signal back here in July 15th. We entered when the 5 EMA crossed over the 20. Maybe it was here. I can't tell with this chart, but we had a great trade. Right now, the 5 EMA is 32.98 and the 20 EMA is 33. So right at this moment, it's 2 cents under. If they close even, that will count as a valid entry. So I'm definitely going to be watching silver today, looking for the 5 EMA to close above. But like right now, it's 2 pennies apart. So we'll have to see where this ends up at the end of the day. All right, AMD stuck in the value zone, moving sidewards. Really nothing we can do with AMD here at the moment. It is really moving sideways, so I do expect this to break out one way or the other eventually. I just don't know which way it's going to break, and I don't know when it's going to break. But pretty safe to say it will break one way or the other. So, you know, we might want to watch for a huge move breaking out on volume. That might be an indicator that it's starting. Who knows? Amazon, nothing here today on Amazon. We're at 49.60. It's above the 20 moving average. That is good, but here I'm waiting for like a dip back down to the 200 back over. That would be a good entry point for me, or conversely, the 550 SMA crossover would also be interesting, but we're quite a long ways away from that today. So nothing there. Trying to navigate these charts is tough. All right. Boeing doing nicely today, up 1.31%. It's just too high. We're getting up there near the third ATR channel. I'd like to see this come back into the value zone, a return to value trade, close under the 200, back over, ideally with the V1 or V2, basically buying the dip. That would be my approach inside the value zone, but nothing here on Boeing. Alibaba is basically been moving sidewards here. It is up today. We're pressing right up against the 1 ATR channel, so it's a little too high for me to buy up here. You know, a decent entry would have been down here on Alibaba when we went under the 200 the previous day, closed back above. Also had a V1. This would have given you a good risk to reward ratio and a nice movement up. I didn't take that trade. I was talking about that trade last night with Anthony, but nothing here on Alibaba today. Caterpillar is above the 200, which is good, but as you can see, we're up near the third ATR channel. Again, 90% of prices stay below the third ATR channel, stay above the negative third ATR channel. So right up here, it's just too high for me. I would need a pullback into the value zone, move sidewards, V1, V2 to get interested in CAT. Look at this, DBC. This is a commodity index. Of course, we gapped up strong because of the issue in Saudi Arabia with the oil. I told everybody I did not want to buy this yesterday because we were too close to the third ATR channel. And good thing we didn't, because now we have come back. We're under the 200-day. So nothing here on DBC today. DDM we bought this back here with the close under, close back over the 200. It's moved up nicely for us, so is up a little today, have not hit a profit target. Disney, really nothing going on with Disney here either. We did make a lower high from here, so in order for me to even get interested in Disney here, I would at the very least have to wash out this previous low, look for a V1, V2 that rejected the -1 ATR channel, and or some type of 30 RSI dip down here. That's what I would be interested in Disney. Lastly, if we have a 1050 cross, that would also get me interested in Disney if I wanted to buy some momentum, but there is nothing on Disney today. Etsy, it's just gone crazy. This is the one that got away. This is the one that got away. You know, I actually was gonna buy it right here, but I got busy at the end of the day. I missed the trade, was glad I did not take the trade. But the next day when it went from under 30 back over 30, that would have been the time to buy it. But I had been burned a couple times on Etsy in the past, and I decided not to go with it. Lesson learned from me. You know, because if I would have bought this, there would have been no reason for me to get out of this. No reason whatsoever. It would have been clear, smooth sailing all the way to here. It would have been a monster, but sometimes that happens. So nothing on Etsy today. Ford. So we're working on a V1 here with the rejection of the 200-day, which is good. Don't think I'm going to buy this. I really would like to see this close under and then back over. And right now, what do we have? We're at a 49.50 RSI, so it looks like it's having some issue with the 50 RSI. It'd be better if it got over the 50 RSI. Then we would have that underneath us. So nothing on Ford. Facebook did go positive. We do have a higher, we have a lower high than up here. So ideally, I would like to see it wash out this previous low before I took a V1 or a V2. There is a V1 here today. It's not a great one. We washed out the previous day, but not by much. But technically, this is a V1, and it is closing above the 20-day moving average and closing above the 50. So, not too bad. Honestly, not too bad, but the way I trade, we have a lower high here. So it actually, when I have a lower high, I need it to wash out that previous low before I would get involved. So maybe somewhere down in this level. So I'm going to pass on Facebook. All right, 5. So we've had a nice move up on 5, but got up near the third ATR channel. I'm looking for this to come back into the value zone, look for a V1, V2. That would be, for me, the way I trade, the proper place to get an entry in here, but it's still a little too high. Gold. Nothing on gold here today. As with silver, I'm looking for a 5 EMA to cross back over the 20 EMA. That is not looking like it's going to happen anytime soon, although we are going to have to watch silver today because that may happen. So nothing on gold today. All right. Google does look like it is going to hold the low of yesterday's low, so we will stay in Google. Goldman Sachs has had a nice move up, looking for this to come back into the value zone, look for a V1, V2, just too high there today. Intel. Same with Intel. We've had this huge move up. I want to see it come back into the value zone, which is below the 1 ATR channel and above the negative 1 ATR channel. Within these green lines is the value zone. So somewhere in here, but nothing there. IBM down slightly today. Nothing on IWM. IBB we bought that yesterday on the crossover, so that is up today a little bit, so that is good. Johnson & Johnson, nothing here on Johnson & Johnson either. Technically a V1, yes, because we did wash out yesterday's low, but not with a lot, so nothing here on Johnson & Johnson. Coca-Cola, this is a good example. You know, we did have a V1 here. I did not take this V1 because, you know, for me to take a V1, I wanted to make a higher high, come into the value zone, move sideways, then have a V1 or a V2. This all happened except for the sidewards movement. Then we rallied up, we failed, so now we make a lower high, so I need it to wash out the previous low, which it did. This could potentially be a valid signal here today. Currently, it is not a V1 because here is day 1, day 2, day 3, day 2 washes out day 1. Day 3 must close above day 1. And let's take a look. So I'm just going to mark that there. That would be a valid entry if it closed above there because we had a lower high. Now we've washed out that previous low. So let me just mark this down in case this does close above, because that would be a valid V. That would be a valid V2. All right, so let me mark Coca-Cola as a potential, but right now it was not valid because the close is below day 1's close, but we'll watch that. LMT doing nicely, but just too high. Does not offer a good risk reward ratio. MasterCard is doing fine. No V1 or V2 there today, so I'm going to pass on MasterCard. MO is Altria. It's at a 27.56 RSI, so this might be interesting if it closes above 30. Merck, you know, this is a potential here. This is a higher low V2. Here we come down, we close outside of the channel, we rally back up into the channel, we have a couple days down. Currently, let's see, the close on day 1 was 82.61, so we would have to close above 82.61 in order for me to get interested in that. And if it does close there, it would close back in the channel. So Anthony, if you remember, we were talking about that last night. But so Merck is also definitely interesting, but we're going to have to see where it closes. How are we doing on time? 10 minutes. Microsoft, nothing on Microsoft. Netflix having a nice day today. But nothing on Netflix. Nike, still a little high in the value zone for me to get interested in. Philip Morris, I was looking for a possible higher low V2 here today. It did open up triggering a V2, but it is closed back below so far. So nothing on Philip Morris. I might be interested in Philip Morris if we close under the 30 and back over. What do we have here? So we have PayPal. No V1s or V2s there. Q's up today, nearing the channel. We do have this position. Let's see, are we getting close to any type of profit target? I guess we're within striking range, but nothing there yet. Snap having a big day. Took out this fractal. A fractal is a high with 2 lower highs to the left, 2 lower highs to the right. Now it's at a 58 RSI. Very, very strong on a lot of volume, but it looks like it's closing above the 1 ATR channel. So it's for me, it's too high to buy. SPY, we talked about that with the overnight. SPY had a very small loss with the overnight, but I will be buying this again at the end of the day. R Square, Looking pretty good since we bought down here. Again, if we reject the 50 RSI to the upside, that will be my exit. Or if tomorrow we close below the previous day's low, or any day in the future if we close below the previous day's low. But did hit one profit target there, so really nothing to do on Square. SSO we have looking to hit a profit target. TLT did bounce today. I'm looking to buy TLT here at a confluence of the 30 RSI and the 100-day moving average. So if we could get down to this range, I would be interested. How are we doing on time? 10 minutes. All right. Tesla. You know, Tesla's had a nice move up, but again, as with a lot of these stocks, I am looking for it to come back into the value zone. Basically, when I say that, basically buying a dip, right? And looking for a V1, V2 entry back up, but nothing on Tesla today. Twitter did have that V1 yesterday. I didn't take it because it didn't wash out the previous day's bar very much, but seems like it would have been a good trade. I didn't take it because I had the Qs, I had Google, I had some other tech, so I didn't want to add on too much tech, even though it was a good signal. But this is moving up, so I hope that moves up. I know Murat has that. UNG is finding a little resistance up there at the 200-day, much too high for me to buy there. UNH down today, nothing there. Oil had that big move up, and we've given back, I don't know what percent, maybe 40% of that move. So nothing on USO. UUP is the dollars, just moving sidewards. Probably have some movement out of this tomorrow after we have the Fed announcement. So basically that's been moving sideways, so nothing there. VIX did actually go negative on the day, so that is good. That is good for stocks. What are we at on the VIX here? We're at a 40.06. I would be looking for a move under the 30 RSI, back over the 30 RSI. That is how I would play VIX. Verizon up today, did bounce off that one ATR channel, just too high for me to buy. I think William had a short up here on this day. I don't know if you took any profits on the way down here. But you know, a lot of time after that first short, you might get a day or two down. You may have a rally. The important part to watch is if it makes a higher high, then you definitely want to get out, right? But if it makes a lower high, then you may have an easier move down. Walmart still needed to get deeper into the value zone. Look for a V1 or V2. XLE closed above the 200. We mentioned this yesterday. It's good that it closed above the 200 yesterday, but it was just too high for me to buy up there. Good thing we didn't. XLF. Nothing there today. We did buy XLF back here on the 29th of August with the close under, close back over the 200, and we had a great trade. We rode it all the way up to here. I ran out of shares up here, but nothing new on XLF. XLE's having a strong day today, but it's range bound. There's really no signals there for me. XLU, nothing there. XLV, nothing there. And XHP, nothing there. All right, so the potentials for today then, let's see if we can get these lined up here. First on my watch list is AGQ. So right now the 5 EMA is a 33. The 20 EMA is a 20. Wait a minute. It's a 33 on the 5, and it's the 3301 on the 20. So right now it is not valid. So we're going to have to watch that one. That one's going to be right on the bubble. Merck. Merck does not look like at this moment it's triggering the V2. So the low is 80. No, excuse me. The close is 82.61, and right now we are at 82.51, so that would not be valid. And Coca-Cola, also a potential V2 here, but the close is 54.26, and currently right now it's 54.23. So this might be a potential. Did reject the negative 1 ATR channel, but it would have to close back above day one's close, and the close is 54.26. So we are still away from that. So with that being said, let me take a look here. All right, so Google does look like it's going to close above the yesterday's close, so that will be a keeper. All right, I mean, I have to move a couple things around here because of these charts. 23 times 1.5. 35. Okay. All right.
Order filled.
All right. I manage a couple accounts here, so I have to even some things out. All right. So as long as Google stays above. Oh boy, that was a mistake.
Order filled.
Alrighty, how about we do it the right way this time? Okay.
Order filled.
Okay, now we're back in business. All right, so as long as Google stays above yesterday's low, which is 1225.19, 1225.19, I will be keeping this. So what we've got to keep our eye on right now is AGQ. All right, currently we are at 33.02 and the 20 is at 33.01. So as of this moment, the crossover is valid and I will be buying. So this is going to be touch and go. I know that. What do we have? 2 minutes. So let's look at Coca-Cola. Coca-Cola does not look like it's going to trigger. Merck, not look like it's going to trigger. On that higher low V2. So that is at 82.61 and it's at 82.53. So it's not there yet. Let's go back to AGQ. 33.02, 33.01. So that is valid. That is valid. All right, we've got 1 minute. The 5 is over the 20, so I'm gonna have to get to the point where I'm just gonna have to make a decision. Now they're even. Even is still fine. AGQ's double leverage, everybody, so I will take a half a position because it is double leveraged. $33.03, $33.02. All right, I'm just going to have to go ahead and take the leap of faith and buy this because it does look like it's going to close. So,
order cancelled.
All right,
order filled.
392 is our new SPY position. And the new AGQ position, 33.26. All right. So we did hold on to our Google because we closed above yesterday's low. I'm going to have to add AGQ here. $33.26 is our new entry. The 5 EMA crossing over the 20 EMA. I will be getting out of that if we close back under, or I will be scaling out to the upside. This doesn't show today's, that's why it's below, but that is our entry on that is our entry on silver today. And then SPY, new entry is 392. And that is for tomorrow's trade. So that is it. Very, very close to break even today. Pretty dull day, but we did enter AGQ today at 33.26 and the new overnight SPY position here at 392. And then let's see where all right, our SQ did end up, we did hit one profit target, and then IBB we entered yesterday is up 5 cents. All right, better than nothing. So anyway, everyone, I apologize about these charts. I know it's probably different from you. It's very different for me, and it kind of messes with my timing because I have to go back and forth. But hopefully Trade Navigator will get this done and we'll get back to normal in the next day or so, hopefully. So I know you guys have a lot of, you've put in a lot of comments and questions, and I'm going to get to those. I just want to put in a quick plug, if you don't mind. Let everybody know that I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. I do like to teach. I think one-on-one teaching is the best kind of teaching you can get. I've had really good success with my clients. I've turned a lot of them from consistently losing traders to consistently profitable traders. I do offer a 10-hour course. It's 5 2-hour live one-on-one Skype sessions with me, and I think you're going to get a lot out of it. My rates, or the cost of the course, is down below in the description. My email's down there also. If you're interested at all, even at all, just please let me know. What I do like to do is I like to just have a free phone call or Skype call with people for about 30-40 minutes, just get to know them better, understand how they're trading, the challenges they're having, the goals they're having. And then, if you decide you want to go ahead and have the one-on-one lessons, then, I'll tailor the lesson plan based upon what you told me in order to help you achieve your goals. And, you hear me say a lot that you have to follow your plan, you have to follow your plan, you have to follow your plan. But what I've learned from years of doing this with students is they don't really have a plan. They don't really have a plan to follow. They're maybe getting good with their entries, or the technical analysis, but that's only one part of the plan. The other part of the plan is money management and psychology and correlation and all kind of stuff. So, and that's also what I do with the one-on-ones, is that that's why I want to get this information for you, so I can really understand where you're coming from, your experience, what kind of financial situation, and then create a real plan for you to follow. Because like I said, people think they have a plan, they don't really have a plan, but I'll put together a plan for you. So if it's of interest, you want to just, have that free Skype call, please reach out to me on Twitter or my email. And then lastly, if you find this channel helpful, if it's helping you with your trading, learning something new, please hit the thumbs up button. Only if you feel that way, right? Only if you feel that way. But if you find this channel helpful, please do me a favor, hit the thumbs up button. It helps Google promote this out to more people. And, there's a lot of people out there. I get emails all the time from people telling me they're having struggles with trading and that the channel has helped them. And, that's why I set out to do this. I wanted to share with everyone what I've learned over the last 24 years and with all the people that I've studied with. It's free. Hit the thumbs up button, promotes it out to more people, and hopefully bring more people here and hopefully help more people. So, okay, sorry about the plug, but I do have to put that in each day. But all right, let's take a look and see. Murat says, when you look at the double bottom, the bottoms do not necessarily be at the same or closing price level. Can we look at square again? Yes, let's look at square.
Order cancelled.
So, Murat, when we're looking for divergences, when we're looking for double bottoms with the divergences, the rule is it has to be equal to the previous low or lower, right? So here it was equal and it still had a bullish divergence. It just didn't have a trigger. So as long as they're equal to each other and have a divergence on the MACD, that is legitimate. Or if it's lower than the previous low and has a and has a MACD divergence, that is also legitimate. So let me make sure if when you look at the double bottom, the bottoms do not necessarily have to be at the same or close price level, right? Yes. They can't be higher because it's not a double bottom. This is not a double bottom because we're not equal to the previous low. So as long as it's equal to the previous low or lower with the divergence, then it's legit. Does that help, Murat? Is that what you were looking for? Murat says, I think most fear comes from guessing. If you don't have a solid entry, exit, and stop, then every trade is fearful gambling. Yeah, it's true. But I think it's all encompassing. I think position size makes you have too much fear. Not having a solid plan, like I just talked about, gives you fear. You say if you don't have a solid entry, exit, and stop, then every trade is fearful. Yeah, if all you're good at is entering something, but you don't know where to get out to the downside, you don't know where to get out to the upside, it causes anxiety and fear, and you're 100% correct. So, you really should be able to take a notebook out, and if you have a good trading plan, you should be able to write it down. Literally write it down. If this happens, then that happens. If that happens, then this happens. So, yes, 100%, Murat. You're always really good. You always have really good comments with this psychology, and it's important. But anxiety and fear coming from the unknown and not knowing what you're going to do. Dr. Alexander Elder taught me, you don't know what the market's going to do ever, but if you don't know what you're going to do, you're dead. And so get together a plan. It doesn't have to be complicated. It just has to be a plan no matter what happens. If it goes up, I'll do this. If it goes down, I'm going to do this. This is the proper position size I'm going to take. And of course, your entry is important, but it's not as important, in my opinion, as having a complete, comprehensive plan of what you're going to do. It takes a lot of the emotion out of it. Anthony, hey, yep, Murat, I get that feeling at the casino too. Not a great strategy. Yeah. Problem is at the casino, everybody, unless you're counting cards or you're playing poker, you're up against a built-in edge, mathematical edge. Just like I showed you on the S&P chart over time, that has a mathematical edge. But the good thing there is that you can be part of the casino and you can be part of that edge. But when you're playing table games, very, very hard to overcome that edge. Steve says, AGQ close to a new 520 EMA crossover. Yes, it did. And we entered that today as well, based upon that. So we're in good company with Steve Burns, because I know Steve bought that as well. Thanks, Steve. Murat says, one of the best wisdom I read was from Warren Buffett. They asked him, why not everybody does not trade like him? He says, nobody wants to get rich slower. Interesting you say that. I was just thinking about that yesterday evening. And it's true, people want to get rich quick. They don't want to get rich slow. And in regards to trading, people want to get rich quick trading. Why not get rich trading slowly without taking all the risks and having all the drama? That's why I say almost every day, guys, take the long view approach of trading, not just investing, but trading, position size, so you can stay in the game, so you can get more skills under your belt. The more skills you have, and of course I'm talking about technical skills, but you know what I'm really talking about. I'm talking about the mental toughness, the psychological skills. The better that you get with that, the longer you're going to stay in the game, and the longer you're in this game, the more money you're going to make as you get better. So 100% right, Merritt. One of the best wisdoms I read from Warren Buffett, they asked him why not everybody does not trade like him or / invest like him. Nobody wants to get rich slow. And so, let's get rich slow trading, not try to get rich fast. Fastest way to lose money is to try to get rich fast or in the market. The Etsy trade is worse than FOMO. It is Romo, the reality of missing out. I have never heard that before, Romo. So true. I think that Etsy trade stung both Steve and I, because I don't know about Steve, but at the time I didn't get in. It's just because I had been burned on it a couple times, and I was like, it's starting to become one of those stocks with me. And the one time I didn't take it, there it goes. So lesson learned. Oh, ZNGA. Yeah, let's take a look at ZNGA. Oh, nice. Where did you buy Zynga, Merritt? I can't remember. Did you buy it back here on the 11th, maybe? Beautiful trade, my friend. Beautiful trade. I think you bought it on the 11th. I think, if I remember right. I could be wrong. Haha, congratulations. Beautiful trade. Gamer Squad 2, how you doing? Good to see you. Can you show how to set the ATR channels in the Schwab platform? Yes. So what you want to do here on your Schwab platform is you want to come over, and then you're going to show all of your indicators. And it's interesting that you asked me to do that, Gamer Squad, because I am planning on calling Schwab, because there's one thing I'm not 100% sure of, but I needed to have some kind of ATR channels. But basically, I have 3 ATR channels above, right? I have the 1, 2, and 3, and then I have the -1, 2, and 3. And so the ATR factor is going to be the one below and above. If you put, and then I add another set of Keltner channels, right, that give me, I would put 2 here, and that will give me, here's the -1, here's the -2, here's the here's the +1. So here, ATR factor 1, that paints the 1 and the -1, right? And then the ATR period is 20 and 20. And then I go to my second ATR channels and see how I have 20 to 20, and then the ATR factor is 2. So what's happening, so here's my -1, -2, -3. Here's my +1, +2, +3. So in my indicators here, I have 3 sets of Keltner channels. One with the 2020 ATR factor 1. Second one, 2020 ATR factor 2. By the way, I only check the top and the bottom, not the middle one. I don't want the middle one on there. And that's for all 3 sets. And then the Keltner channel 3, period 2020 ATR factor 3. Again, no check in the middle. And that's what gives me the 1, 2, and 3 above, and the -1, 2, and 3 below. Does that make sense, Gamer? Murat says check Keltner channels. It's the same. Yeah. John says OKTA. Let's take a look. Interesting. So yesterday we bounced off the 200 day, we rejected the third ATR channel, and we had a V1. Now the day one bar is I guess it's okay. I guess it's not larger than one ATR. So, I would have considered buying this here. Let's see, what's the ATR? The ATR is 29.94. Yeah, I guess I couldn't have bought it yet, John, because even though it did bounce down here at this level, it's still under the 30 RSI, and my rule. If it's above I'm not going to buy something below the 30 RSI, even though it did have this nice confluence of the 200 day and the third ATR channel. So, for me, I just can't do it, but you can see it did bounce when it hit that confluence. But if I wanted to get back in, if I really wanted to get into this, it would have to close above the 30 RSI. So, if it were me, I couldn't take this trade today, but it is interesting that it did bounce right there at the 200 and the third ATR channel. Ramble says, what's going on with your charts? So Trade Navigator is having an issue getting the New York Stock Exchange intraday feeds on stocks that are traded on the New York Stock Exchange. So you can see here, this was from yesterday. It's not showing today's. If I switch over to Google, it is showing today's because that's not on the New York Stock Exchange. So they've had this issue for about 4 days, and it's really been a pain. It's really been a pain, and that's why I had to open up those show you those Schwab charts, because those are the charts. I mean, I need something to use today, but I'm so outside of my comfort zone with other charts. So hopefully we'll have it up. Boy, I sure hope so. Murat says, okay, you answered my double bottom question. Good. Anthony says, hit the thumbs up, guys. 12 likes with 30 people watching. There is so much free value. Greg works hard, and he is such a nice guy. There are so many scammers out there, and we found a safe place to learn. Oh, thanks, Anthony. Yeah, there are a lot of scammers out there. You know what I mean? You are correct. So I'm not one of those. I'm just trying to teach what I know. So I appreciate that. Thanks, Anthony. Murat says, yes, the 11th, 577. Yeah, right about here. Yeah, that's what I thought. Nice trade, buddy. Really nice trade. Anthony said, yes, on Zynga. I got out last week because I wanted to clean up. Oh, dang it. I know. Anthony says, what 30 MA do you use, simple or exponential? So, on the IBB trade that we just got in, we used the 5 EMA and the 30 EMA. So on that particular crossover, I'm using the EMA, Anthony. And if you look at, that thing I sent you, that Word doc I sent you, that will show you that but other than that, and to confuse you even more, we have Google. We took that on the 1030 SMA. So the IBB, I'm using the 5 and the 30 EMA. On the Google, I'm using the 1030 SMA. So, but like I said, that Word document that I sent you, that has it all lined up. And when we get your charts all up and going, we'll just create different tabs, different charts. Like here, you can see this is only the 1030 SMA on Google, so I don't have to wonder what is it, or is it EMA or SMA. It's just right here it shows. And then when I go over to the IBB ones, it just shows down here, 530 EMA. But I know when I started with the crossovers, I was like, wait, SMA, EMA, which one's which? Got them all confused. Best just to write them down. Best just to write them down so then you have them right in front of your face. All right. And of course, on AGQ, we had the 520 EMA cross. So that's our new position for today. Google, we stayed in because it closed above yesterday's close. Q's moved up, almost hit one profit target, not quite. IBB up just a little bit on the trade, so happy for that. Square was a good day though. And that's been a good trade, especially with the market, having come back down the last couple of days. That was a nice ray of sunshine in the down. Okay. Any other questions from anybody today? If you do, just type them on in. I'm happy to answer them. Boy, I'll tell you what, I really hope my charts come up in the next few days. I really hope. It gets you so much out of your routine when you're switching back and forth and you're not clear with the charts and oy vey. So, but even through that, we're still doing good. We're still doing good. We're right in crawling distance to all-time high for the year here. Hey, you're welcome, JT. You are certainly welcome. All right. JT, thank you so much for coming by. It's good to see you, sir, as always. Anthony, great to see you. You did really well last night with your lessons. I know I rapid fired questions at you, but you did really well, so good job. Gamer Squad, I hope that helped. Interestingly enough, I've been working on that the last couple of days, so I'm glad that I could show you that. Murat, good to see you, my friend. Great job on Zanga. Ramble Ron, good to see you. John, good to see you. Appreciate you coming by. Steve Burns, appreciate you coming by. And I guess we'll just have to get over our Romo on Etsy. John Cortez. Okay. I did answer that earlier. I thought I skipped over it, but thank you for coming, John. But yes, I do use market orders when I buy the SPY at the. Actually, I use an end of market on close order at the end of the day, but that essentially is a market order. And then I just put my order in at nighttime to sell it in the morning. And then Frederick, good seeing you. I know you didn't get your car today with your trade, but that's okay. And I hope you're doing okay after that. And Marco, good seeing you. I hope you're learning something. If you have any questions, you please let me know as well, okay? And if you guys didn't think of something today, during the live stream, if you have a question later, you can always email them to me, or you can always send me a message on Twitter as well, and I'll do my best to get right back to you, okay? Murat says, have a nice walk. Well, it is not the strongest who survives. It is the one who evolves fastest. So you are managing without your fully functional trade navigator. Hey, that's a good point. Yes. Yep. I had to hurry and get those Schwab charts up going. Otherwise, I would be trading... I would not be trading without the charts. So, I may have to look if Trade Navigator doesn't get this taken care of. I may have to find some other charting, which would be very strange because I've been using it for 20 years. So it'd be like being married for 20 years and all of a sudden dating someone new. Don't break up with me, Trade Navigator. We have a good thing going. So... all right, everybody. Thank you so much for coming. Appreciate you spending your time and investing your time, and I hope it's helping. And let's watch what happens tomorrow with this Fed meeting. Let's be on guard because we certainly could have a big move out of this. We never know. So, enjoy the rest of your day. Go out, do something nice for somebody today. Hold the door open, give them a wave. Just say hi or be nice. We need a lot more of that in our society these days, right? So, all right, I'm going to head up in the mountains, do my hike, and hopefully see everyone tomorrow during the last hour of the market. So have a good rest of your day. Talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.